Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Alessandro Romani, Head of European Equity Derivatives at Nasdaq, to discuss custom basket forwards, a new generation of a derivatives product. Alessandro, it's great to have you with us. Welcome to Trade Talks.
Thank you.
You got it. Tell us about what custom basket forwards are and why Nasdaq has decided to introduce this product to the market.
Yes, as you just said, really, we look at custom basket forwards as a new generation of equity derivative contracts. As the name indicates, it's a standard forward contract whose underlying is actually a custom basket of stocks that the clients define themselves based on a universe of over 1,700 European stocks. So we developed this product to address the client demand for simpler and more efficient way to manage their equity exposures by using a standardized exchange-traded derivative contract, as opposed to trade bilaterally OTC products like equity swaps.
What difference will this new product have for clients who are trading OTC today?
So this product provides the clients with a solution that combines some of the flexibility and the bespoke elements of OTC equity swaps. For instance, the most relevant one being the customized equity exposure, with the benefits of a standardized contracts that is centrally cleared, and therefore by that addressing some of the inherent complexity and challenges with unclear derivatives.
Can you exemplify what some of the challenges with unclear derivatives are?
So I would say it's two main aspects: the bilateral nature of trading unclear derivatives and the impact that regulation is having on that. An unclear derivative contract implies a bilateral risk directly with the counterparty to the trade, and also a bilateral dependency in the liquidity provision with that same counterparty, as opposed to a multilateral trading on a regulated market and having a clearinghouse as a counterparty, which offers the lowest level of risk. In addition, we have regulation on uncleared margin requirements and capital requirements, who have increased the complexity and the cost of maintaining uncleared derivative exposures. And these are really the main driving forces behind the broad interest on the client side on alternatives to OTC derivatives in general and the need for central clearing.
What are the typical use cases for custom basket forwards?
So most of the use cases where today OTC equity swaps are used are very relevant for custom basket forwards. To give an example, investing in thematic basket or sector baskets, or more in general, investing in tailor-made indices are some of the most relevant use cases that we see. I would say, consider, for instance, the trend in sustainable investments. As a portfolio manager, you could use custom basket forwards to accurately replicate with a derivative contract the stock portfolio that is resulting from your specific ESG strategy or climate strategy.
Can you explain to us how the custom basket forward solution works in practice?
Sure. So first step, the client needs to define the custom basket. They start by selecting the base currency, the return type, but the most important element is the composition of the basket. And they will select the stocks to be included and their weights. The basket composition can be made public or can be kept private in case the client doesn't want to disclose broadly their investment idea. And then on the next day, we will have a cash-settled forward contract available for trading. And throughout the lifetime of the derivative contract, Nasdaq will continue to calculate the basket value and administrate the basket in compliance with European benchmark regulation. So it is really that simple. It's a one transaction in one derivative contract on your custom basket of stocks.
Are there any differences in the advantages for buy-side versus sell-side clients when trading custom basket forwards?
So both buy-side and sell-side are facing increased complexity and cost when trading OTC derivatives due to the impact of various regulatory initiatives and the impact that those have on the industry. From the buy-side perspective, there are firms today who are prevented from trading OTC products as part of their mandate. And then there are firms who may be trading OTC products today, but they're finding it increasingly complex and costly and are unwilling to continue to take the inherent risk with OTC products. And then we have clients who simply do not have access to OTC products. So for all of them, I would say that custom basket forwards may be a new opportunity or an alternative. And then on the sell side, we have banks with important equity swap portfolios who are impacted by higher capital requirements and by high margin requirements on their uncleared derivative exposures. For them, this product could help alleviating this situation, moving part of their swap exposures into custom basket forwards could really help them improving their efficiency in how they allocate the capital and collateral. And then maybe another element there is that for banks, this product could provide an opportunity to address new client segments that traditionally are excluded from the OTC market. So by proposing them new investment ideas built and tailored around the concept of custom basket forwards.
And finally, Alessandro, what is the level of member and client interest and demand you've seen for this new product?
So we initiated this product a few years back due to explicit interest from buy-side clients and several of the large sell-side firms who are looking for alternatives to OTC equity swaps. The interest has remained very strong throughout this journey and also strengthened by the regulation that has been introduced, also by new trends in the industry like ESG investing. And we are now really very excited to be able to offer this product to our clients.
Okay, Alessandro, we appreciate the insight. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.